Welcome to today's Explainer. I'm absolutely thrilled you're tuning in because we're unpacking a massive, and frankly, under the radar, paradigm shift happening right now in the crypto market. Now, if you're just glancing at the top-line charts, you might think things look pretty standard, maybe even a little quiet, right? Well, scratch that. Beneath the surface, the whole foundational structure of digital assets is completely rewiring itself. We are officially leaving the era of isolated speculation and entering what we're calling the integrated utility era. And trust me, the implications for how we interact with money, stocks, and real estate are absolutely fascinating.
Okay, let's dive into this. Right now, Bitcoin is holding incredibly steady near $78,500. It's basically acting as a true market mean. But what makes this stability so remarkable is the environment surrounding it. We're navigating some really intense global macro volatility right now, especially with the ongoing political showdown in Washington between President Trump and Fed Chair Powell. Normally, that kind of macro uncertainty would literally send shockwaves through digital assets. But instead, crypto is holding its ground and quietly doing something much more important. It is building infrastructure.
Which brings us to this massive, provocative question. What happens when crypto stops being just internet money and starts buying your real estate and your traditional stocks? I really want you to think about that for a second. We've spent years, literally years in this space talking about the dream of mass adoption, but what we're witnessing today is the actual integration of digital assets into the legacy physical world. This isn't just some abstract future concept anymore. It's happening right now, in today's daily news cycle.
To really grasp this shift, we have to recognize that for the longest time, crypto operated almost exclusively as an isolated asset class. Think back to all those speculative meme tokens or isolated decentralized exchanges. But today, the whole regime is flipped to integrated utility. It's kind of like, well, to use a biological metaphor, the crypto industry is no longer content living in a petri dish. It's actively building the connective tissue that links on-chain liquidity directly to the global, real-world economy. The focus has fundamentally shifted from pure speculation to real revenue-generating assets.
Section 1. Merging Crypto and TradFi. Let's look at how this is playing out.
Here's a perfect actionable example of this new reality. Zoomex just made a massive move by launching ZoomexStocks. And the process is incredibly simple. Step 1, you hold USDT, a standard stablecoin. Step 2, you use the ZoomexStocks platform. And Step 3, you instantly own global equities. They're offering global equity trading directly with USDT, and they've even paired it with a limited-time fee rebate campaign. This is literally a game changer because it drastically lowers the barrier for crypto-native investors. You don't have to cash out to a bank, wait days for settlement, or deal with wire fees just to buy a traditional tech stock anymore.
And this brilliantly illustrates the emerging concept of an on-chain stock market. Basically, this is a system that allows retail users to trade traditional tech stocks using cryptocurrency stablecoins, completely bypassing traditional banking friction. Just imagine the efficiency here. The wall between your digital wallet and the NASDAQ is effectively coming down, making your stablecoins infinitely more useful.
But hey, this integration isn't just about buying stocks, right? It's about everyday utility in the physical world. Cryptomus just announced the debut of a secure crypto wallet featuring virtual card support. This is a huge leap forward for retail utility. By allowing easy spending of digital assets in the physical world, whether you're just grabbing a coffee or paying a bill without asking your bank for permission first, Cryptomus is addressing a massive demand for crypto-to-fiat payment solutions. Again, the overarching theme here is bypassing the friction and the gatekeepers of traditional finance.
Moving on to Section 2, Yields, DAOs, and Real Estate.
Let's run down this checklist of brandy developments to see exactly where institutional capital is flowing today. First, we have Aurum Yield, a structured DeFi protocol. Next, we have the Smart Prop Solution, or SPS, rolling out a real estate presale. And finally, we have GenZVerse launching a DAO ecosystem on the Polygon network. What you really should take away from this list is that smart money is rapidly moving away from purely speculative tokens. It's aggressively seeking out assets that have actual underlying revenue models and real, physical world value.
Let's zoom in on that real estate aspect for a second because it's absolutely a game changer. This quote perfectly captures the mission of the SPS real estate tokenization presale. Bring mid-market liquidity to the real estate industry by allowing for fractionalized on-chain ownership. This is a prime example of the real-world asset or RWA sector expanding into physical property. And why does this matter to us? Because historically, mid-market real estate was highly illiquid. It was basically locked away for the ultra-wealthy. Now, the blockchain is fractionalizing it, allowing for much broader, highly liquid access.
On the pure finance side, we've got new players like Aurum Yield entering the stablecoin yield space. Now, they're specifically targeting institutional investors who are looking for diversified yield products that go way beyond your standard basic lending protocols. This is advanced, structured DeFi. It clearly shows that institutional smart money demands sophisticated, reliable stablecoin-based strategies, and the market is actively stepping up to build that exact infrastructure. Alongside institutional finance, we're also seeing a massive revival of community-driven governance. GenZVerse just introduced a community-owned, open-source DAO built on the Polygon network. Its goal? To create a transparent, completely decentralized ecosystem specifically for younger digital native investors. So, as a quick actionable takeaway here, you should absolutely watch for a surge in Polygon and Polygon native tokens today as this highly anticipated GenZVerse ecosystem gains real traction.
Let's jump to Section 3, the Bitcoin payment revolution.
Let's move to and see how this builds historically. Back in 2009, Bitcoin was revolutionary. But let's be honest, it suffered from some pretty slow Layer 1 transactions. By 2018, we saw the early days of the Lightning Network trying to solve that. Now, in 2026, we're entering what SecondsBark describes as a new era of high-speed rails. What's super fascinating here is that SecondsBark has managed to attract former Blockstream developers to their initiative. They're intensely focused on improving the efficiency of Bitcoin native transaction layers so Bitcoin can finally compete with the sheer speed of altcoin networks.
This massive global infrastructure push is also dictating exactly where the industry's thought leaders are gathering. It was just announced that the EastPoint Seoul 2026 Summit will convene global leaders this September to discuss the intersection of the digital asset and AI economy. Highlighting this localized global summit is incredibly important. It acts as a massive signal of South Korea's continued, outsized importance as a forward-looking hub for true machine-led finance. The frontier of autonomous value is quite literally being shaped right there.
Section 4, May 2026 Market Outlook. What does all of this mean for your portfolio?
Well, simply put, the market is maturing to protect itself. If we neutrally report on the current climate, we have real threats like macro volatility, which is heavily driven by the ongoing Trump-Powell dynamics in Washington right now. But look at the crypto buffer side. The market is using RWA diversification, moving into structured DeFi and physical world assets to actually absorb that volatility. And for the threat of traditional banking friction, the buffer is the explosive rise of on-chain equity trading. The ecosystem is actively building its very own shock absorbers against traditional system failures.
So the crucial point is understanding what could actually push us higher from here. We're watching 3 specific breakout catalysts. First, if ZoomexStocks volume shows high institutional uptake, proving the model works at a massive scale. Second, sustained Polygon token surges driven by actual community utility in projects like GenZVerse. And third, continued Bitcoin stability as its payment rails upgrade. If these 3 forces align, they could absolutely provide the necessary catalyst to push the broader market into a sustainable, long-term breakout.
Which leaves us with this final, truly provocative thought to wrap up our explainer today. Will this newly built connective tissue finally trigger a breakout above that $78,500 true market mean? The industry is no longer waiting for the real world to adopt crypto. Crypto is actively integrating itself into the real world. It's just a stunning evolution to witness. Keep a very close eye on how these integrations perform in the coming days, because they are reshaping the global economy right before our eyes. Thanks so much for joining me for this explainer. Stay curious and keep learning.